Now, Avinash, as we speak, Infosys numbers are also out. Actually, the profit figures has disappointed, and it seems it has come below the street's expectations. Whereas revenue, which was expected to be muted, was ahead of street expectations. In fact, it's about 2% ahead of the expectations. But reading at the numbers, the first draft of numbers, it seems that Infosys has cut its revenue guidance, at least the upper band of its revenue guidance. We saw that being a major overhang on the stock in the previous quarter when it cut it down from 4 to 7% to 1 to 3.5%. I think they have cut it down to the upper band to 2.5% now. How much of an impact do you see, it being on the stock prices?
So I think this is a big negative surprise because earlier in the previous quarter, as you rightly mentioned, when the revenue guidance was cut, the market took it quite negatively. And I think the same issue, if it is going to be repeated in the quarter going forward, then I think clearly it means that order wins are not getting converted, and execution is going to be a major issue. In fact, from the TCS commentary also, one thing was very valid is that conversion into actual order implementation is now getting a very big challenge for Indian IT companies. So I think it's going to be negative for Infosys. My sense is that the market was not expecting this kind of negative surprise, and of course the profit number has been below expectations. But the commentary and the guidance which has been cut, I think definitely sounds that at least the next 1 or 2 quarters are going to be extremely challenging for Infosys.
Now, Shweta, let's just quickly look at the Infosys numbers here. Now, Infosys has, the revenue has gone up by about 6.72% on a year-on-year basis, whereas the expectation was, we'll see a 3% rise on a year-on-year basis. So, revenue figures have come in at just below the 39,000 crore mark at 38,994 crores in Q2 of FY24. We have also seen a good profit jump, on a year-on-year basis. On a year-on-year basis, it has actually beaten the street's expectations. The street was pegging the growth to be at about 2.2%. We are seeing a 3.17% rise, in profitability on a year-on-year basis. Also, the operating margins, although they have jumped, it seems that, they are muted. The street was expecting a 50 basis point jump on a, year-on-year basis or so, but we have only seen a 35 basis point jump. So, not too bad, but good numbers as far as, on a year-on-year comparison. So, Avinash, what's your first, initial reaction on the numbers? What's your big takeaway here?
No, I think, see, more than the numbers, if the commentary on the guidance is going to be negative, that is something which the markets should be little wary and be concerned about. I think the markets obviously look at the future, and I think if the guidance has been cut, then I think it definitely is a not sign. And I think more importantly, I think order execution out of the current order book plus new orders bagged are now going to be critical variables. Plus, I don't know what has been the attrition number. The attrition has also been a kind of a major issue for most of the larger IT companies. So my sense is, I know it would be at best be a market performer. I wouldn't expect this performance to result into some sort of a significant amount of re-rating for the stock. So I think we have been telling our clients that at best to hold on to these stocks, but fresh buying at these levels we have not we don't advise, at least at current valuations.
Now, Avinash, also reading the brokerage commentary, it seems that, even though the companies have landed, large deals in the quarter gone by, but the revenue, because these are long duration contracts, is only expected to, trickle in and add to the growth of the company from starting from FY25. So, I mean, what are your thoughts on that? Do you agree with these brokerages? And on the back of it, will FY24 finally be a washout year for IT companies?
I think it looks like that the year that is FY24 will be a very challenging year. And in terms of earnings growth, which is a very crucial number which the market tracks, I think earnings growth could at best be flattish for most of the IT companies in FY24. And as you rightly said, most of these companies have got large order books, but most of these are going to get implemented, from FY25 onwards. So I think there's going to be a little bit of uncertainty on these orders. In case these orders get delayed or typically get executed at a later stage, then I think they are going to actually result in a slower earnings growth trajectory for these companies. So I think it's going to be a little cautious road forward. considering the fact that these companies have always played on the buyback and the cash positions, of these companies. I think what the market looks is the earnings growth and the growth visibility. So unless these, metrics actually come back again in a strong way, most of the IT companies, including Infosys, TCS, are going to trade in a very narrow range, and there's unlikely to be any significant, re-rating in the near term.
Avinash, one final question on as far as Infosys goes. The commentary will start trickling in the next few hours. What will be some of the things that you will be tracking from the Infosys, Q2 results?
I think outlook on margins. Secondly, what is the attrition levels? And third point would be, what kind of, execution of the current TCV orders which the company has got. And most importantly, do they continue to see significant headwinds in US and Europe? I think these would be the broader, kind of data points which I would be looking forward to. And obviously, in terms of, the revenue growth, any cutback in the dollar guidance would definitely be a negative surprise. So I would be looking at all these inputs, from the management side.
And Avinash, HCL Tech is another company that is expected to, announce it Q2 numbers, probably in the next few hours or so. But I want to talk about the stock price action. As far as a top 3 IT company go, the expectation on the street is that HCL Tech will outperform, at least as far as this quarter goes, both Infosys and TCS. But the stock has in fact been one of the worst performers. So what gives?
Yeah, I think broadly, HCL Tech has always traded at a discount to both TCS as well as Infosys. And I think in terms of numbers, broad street estimates point out that this quarter could be slightly better in terms of margins, in terms of the revenue growth. But I think here again the question is whether the management is committed to deliver this, and where they could probably sustain this growth in the next 1 or 2 quarters. Typically, the second half is supposed to be a much better quarter period for the companies in the IT space, and I think that is something which the markets would like to look at. See, more than the numbers, it's the commentary and the growth outlook which would be shared by the management, and that is something which has been slightly patchy for HCL Tech. So I think in terms of numbers, we don't deny the fact that valuations are looking attractive. But again, whether these numbers could be sustained, any slowdown signals, signs, if have been highlighted by Infosys management, would obviously mean that the overall IT space is going to be challenging. It cannot happen that HCL Tech will grow and Infosys will not grow. So I think typically we'll have to see the management tone of all these companies, and then take a call as to whether HCL Tech really qualifies as a buy. But currently, we have a hold on the stock.
So wait and watch mode as far as the IT pack goes.
Absolutely.
And all eyes will be on the management commentary.
And of course the guidance, because for Infosys, upper end of the revenue growth guidance has been cut by 100 basis points. In fact, margin guidance is same. It's been maintained at similar rates. Avinash, what are you making of as far as the guidance from Infosys is concerned at this point in time? And what sort of commentary would you be expecting from both Infosys and HCL Tech? What will be the broad parameters, indicators you'll be looking and watching out for?
As I said, the broader number which will be very much important is the dollar guidance. Any cutback in the dollar guidance is definitely going to be negative for both Infosys and HCL Tech. Secondly, in terms of margins, I think TCS has shown a slight bump up in EBITDA margins. Whether margins are going to be sustained or whether there would be some downward pressure. And thirdly, on the attrition side, has attrition now stabilized? And most importantly, what's the kind of business outlook, from key customer regions like US and Europe? Because US has been growing very pretty well, but Europe has shown a stodgy kind of growth. So I think all these points will be important. I think once we get the management commentary out, these things would be very important to note whether the management is upbeat, positive, or slightly cautious. If they give a cautious commentary, then I think it clearly means that the third and the fourth quarter is going to be equally challenging.
All right. And, since we're talking about attrition, we know, with the way TCS and its guidance and its commentary, attrition for the quarter gone by has come down lower. But the number of people, the headcount has also reduced, which substantially hints at a hiring freeze. And that hiring freeze will, of course, span out perhaps in a positive territory. The freeze may go away because there are deals that these companies have been signed, they're mega deals, and in order to live up to those deals and the expectations, more hiring in pipeline.
And Avinash, given that these companies have landed these long duration multi-billion-dollar contracts, I
You
mean,
need more
you
people.
need more talent. You need to retain more people. You need to hire more people as well, right?
Do you think hiring is going to happen soon?
No, I think my guess is, hiring will have to happen because these are all long gestation projects. But I think clearly, as I mentioned to you, that attrition has also been a major issue for almost all the large IT companies. If they manage to control the attrition level, then I think they are well positioned. In fact, TCS, as you rightly mentioned, the attrition level has been maintained. But I think going forward, most of the other IT companies continue to face challenges. Key talent is still not available, and whatever is available, over a period of time. So I think it's going to be a key challenge even on the management, on the manpower side, because in IT the major asset is the manpower, and obviously they need to have skilled manpower to ensure that long gestation projects and long duration projects are serviced, within timelines given by the customer. So we'll have to wait and watch and see what the management commentary on this aspect is also.
All right, Avinash, thank you very much for taking time out. Thank you for joining us on this very crucial day. We, of course, keep tracking all the numbers here on News9. Remember, the earnings season has kick-started with TCS now, Infosys, HCL Tech results also awaited very, very soon today. We will keep bringing all those numbers right here on News9. Thank you for being with us this afternoon.